And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 5th, 2026, and we're diving into ConocoPhillips' latest earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. ConocoPhillips has just released their fourth quarter and full year 2025 results, and there's a lot to unpack, from their earnings performance to their strategic initiatives for 2026.
Revenue and profitability overview. Let's start with the financials. ConocoPhillips reported fourth quarter earnings of $1.4 billion or 1.17 cents per share. However, the adjusted earnings per share came in at 1.2 cents. How does this compare to last year, John?
In the fourth quarter of 2024, ConocoPhillips had earnings of $2.3 billion or 1.90 cents per share. The adjusted EPS was $1.98. So there's a noticeable decline year over year, primarily due to lower realized prices despite higher production volumes.
And for the full year?
For the full year 2025, earnings were $8 billion or 6.35 per share, compared to $9.2 billion or 7.81 per share in 2024. The adjusted EPS for 2025 was 66 cents, down from 7.79 in 2024. Again, lower prices played a significant role in this decline.
EPS forecasts and analyst expectations. Analysts had forecasted an EPS of $1.08 for the quarter based on a survey of 8 analysts. ConocoPhillips reported an adjusted EPS of 1.02 cents. What does this tell us, John?
This indicates a miss on the EPS forecast by 0.06 cents. While the company has been strong operationally, the lower-than-expected EPS reflects the impact of lower commodity prices, which have been a challenge for the entire industry.
Operational efficiencies and future outlook. Looking ahead, ConocoPhillips has provided guidance for 2026. Can you walk us through their strategic focus?
Absolutely. For 2026, ConocoPhillips has set a capital expenditure target of approximately $12 billion and adjusted operating costs of $10.2 billion. They expect production to be between 2.33 and 2.36 million barrels of oil equivalent per day. Additionally, they've declared a first quarter dividend of 84 cents per share.
How does this align with their long-term strategy?
The company is focused on reducing capital and costs by $1 billion in 2026 while maintaining a strong return of capital to shareholders, targeting 45% of CFO. Their diverse asset base and ongoing projects like the Willow Project in Alaska and LNG initiatives in Qatar and the U.S. Gulf Coast are key to their growth strategy.
CEO insights and strategic initiatives. Ryan Lance, the CEO, has made some significant statements regarding their performance and future plans. What are the highlights?
Ryan Lance emphasized their strong performance in 2025, highlighting the successful integration of Marathon Oil, which doubled their synergy capture to over $1 billion. He also mentioned their focus on delivering $7 billion in incremental free cash flow by 2029, with $1 billion expected annually from 2026 through 2028.
How does this position ConocoPhillips in the industry?
ConocoPhillips is well-positioned with a best-in-class asset base and a focus on cost reduction and margin enhancement. Their strategic initiatives and strong cash flow generation provide a competitive edge in the global energy market.
Key takeaways. In summary, ConocoPhillips has faced some challenges with lower commodity prices impacting their earnings, but they remain focused on strategic growth and shareholder returns. John, any final thoughts?
ConocoPhillips is navigating a tough market with a solid strategy. Their focus on operational efficiencies and strategic projects positions them well for future growth. Investors should keep an eye on their ability to manage costs and deliver on their guidance.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on ConocoPhillips' performance in the comments below.